This Pitch Breakfast video is brought to you by Spangler and Agins, attorneys for Charlotte's startup community.
Glad to be here, Vic. Thank you. Welcome, everyone. My name is John Zettler, and I'm the CEO of Commandiv. Commandiv is a stock trading platform with automated investment advice built in. What we're building is the world's first B2C TAMP product, or turnkey asset management platform that allows you to fire your financial advisor and run sophisticated investment strategies on your own wealth. Now, you might have heard this myth that robo-advisors are the future of retail investing. That is flatly wrong. Today, self-directed investors make up the majority, and self-directed investing is growing faster than advisory relationships. What people want is customization and control into their own wealth. And that's exactly what Commandiv provides. I've logged into my Commandiv account right here, and you can see some of the things that are very familiar of self-directed brokerage. You can see my account balance, my account over time, and the individual securities that make up my account, both stocks and ETFs. I can go down here, I can search for a stock, and I can see a couple in my watch list, and I can do a little more digging into one like Zoetis. So I can see some fundamental data on the company, I can see a company description, and I can see how the stock has performed over time. Let's go through the process of buying 47 shares. Very easy, confirm the trade, send it out to market. Great. What you saw was self-directed investing, buying single stocks for 0 commissions. Nothing particularly new here. Robinhood does it. So what's different about our platform? Well, you see down here that we have $19,000 of cash in this portfolio. That's the problem. I log into my account, I always have more cash than investment ideas, and that's a growing problem. I don't know how to deploy that cash. I might have ideas on the strategies I want for that cash, but I don't know the right ETFs or the right number of shares for each one of those trades. Enter Commandiv. Go up to our advice tab and very simply pop in and get trade suggestions directly built for you from Commandiv. These are all based on your target portfolio. So this target portfolio is built for you in the onboarding process, and then you have the opportunity to go in and change those settings at any time. You could say, you know what, I want 10% tech exposure into my portfolio. I want 10% utilities. I want dividend paying stocks. I want emerging market exposure. This level of customization does not exist in any software platform today, and that's ridiculous. So that's what we built. And then we allow you to backtest it too. So you can say, okay, well, what would this portfolio have done over the last 7 years with $250 of recurring deposits, 4 years, and so forth. Then I can go up, even dig into what these companies are and what these ETFs are being recommended to me. So my foreign developed market equity exposure is VEA, and I'm seeing some data on expense ratio, underlying stocks, and a description, and also why we recommended this above other alternative products. Review the trades, send it out, very easy, problem, solution. I went from $19,000 of cash to $146, and it's really that easy. So to jump back, we are talking about like I said before, we are a blend between self-directed brokerage and investment advisory, allowing you the best of both, automating your trade suggestions and doing the heavy lifting for you, but letting you be in control and set your target portfolios. We're talking about a massive market here, so $830 billion of investable assets, which belongs to our target market of 26 to 45-year-olds with $50,000 to $250,000 of investable assets. What's even more exciting is the growth rate behind it. There are these massive tailwinds leading to 700% growth, including a $30 trillion wealth transfer from the baby boomer generation to today's millennials. Now, this is a very new opportunity. What happened was we previously had this old guard where everyone was vertically integrated, and then 2 major shifts happened in the industry. First, we moved to the privatization of the stock exchanges, and the exchange costs plummeted. Then we moved to an era of open clearing firms and an API-based brokerage services, which brought the brokerage services into a complete commodity product. Where does all the value lay in the future? It lays at the very top with the investment advice and the relationship, and then in the future, the data on those customers. And that's why we're positioned right there as an investment advisor and an interface layer. We charge anywhere from 0.25 to 0.49% on assets. And we've got an all-star team. I come from the hedge fund world and lead financial engineering, product, and marketing. And my partner was formerly the lead software engineer at a machine learning company in New York and leads software engineering. So a quick list of our timelines. We're participating in Queen City FinTech right now. We are waiting on our ADV to get approved by the SEC, which means we will be revenue positive and customers by the end of this month. We're very excited about that. So in quick review, we're talking about a unique value proposition, a product that doesn't exist today. We're talking about 700% market growth, and we're talking about a new opportunity based on the API-ification of financial services. So thank you so much, and I really appreciate you taking the time to listen.
Is it on?
Yes.
Okay, maybe not.
You need to hold it, I guess.
There we go.
There we go. All right, now success. Great job. I really liked the demo, by the way. I know it's always risky to do that live, but I presume that was live or pseudo live. So great job on that. Couple of quick questions. On the I like the phrase fire investment advisor, by the way. Sorry, Vic. It certainly helped us focus on what you were doing. Where I got a little bit lost was kind of your go-to-market strategy, right? Are you a B2C or are you a B2B2C? So let me give you a chance to answer that question.
It's a great question. We are directly B2C.
Okay.
And our pathway is, we are acquiring customers even before launch via our wait list, and we have a large and growing wait list for those customers where we're going to be bringing all of our closed beta users. And then we'll be doing online direct advertising through Facebook specifically for the amount of specification and targeting that you can do through that channel, as well as affiliate programs. So putting out unique referral links to all these financial content providers out there who are constantly looking for monetization strategies and giving them referral links for anyone they bring to a funded account, they get paid.
Gotcha. And I liked your slide. You did the overlapping circles that you were trying to, I think, identify kind of where you fit in the marketplace.
That's right.
So the bit of coaching on that is you did that one so fast I couldn't figure it out.
Sure.
So I would spend a little bit more time on that. And then the last question I have is, are you familiar, back a long time ago, God, this was decades ago now, the very first fintech company that I looked at when I was working at Bank of America was a company called Financial Engines. Are you familiar with them?
No, I'm not.
If not, you should go, because they were the very first company, kind of in the modern age, if you will, post-2000, that actually was squarely focused on providing financial advice to the individual investor.
And it's Financial Engines?
Financial Engines.
Look forward to it. Thank you.
Okay.
Great presentation, thank you so much. I'm going to have a couple questions. Are you asking for money? Are you raising right now?
We are not. We just closed around
and
are comfortable.
Okay, great. What's your competition?
We have a very broad competitive landscape.
Right, but specifically in this sector that you are trying to address, simply because great, very strong presentation. I've seen a couple of these in the last 6 to 8 months. I was just wondering if you are familiar with other startups that are trying to do this.
Oh, absolutely.
Okay.
There are a number of places, and what we like to say is that there is an axis, and that axis is delegation. On one hand, you have complete self-directed brokerage, and these are the providers, the huge guys, right? The Fidelities, the Schwabs, the Vanguards, the Trade, TD Ameritrade, so forth, even Robinhood now offering zero commission trading. And then on the other side of the axis of delegation is full outsourcing of portfolio management. And on this side, you've got Betterment, Wealthfront, Future Advisor, you name it, every robo-advisor. Where we believe the massive sweet spot to be is in the middle. For those people who want the benefits of automation, time-saving, money-saving tools, but them staying in the cockpit of brokerage. So they're the ones calling the shots, they can set custom target portfolios and so forth. In that middle ground, there are very, very few, if any, actual startups participating, and where we view the real, in that segment, where we view our real competition is from human financial advisors. And right now, we're targeting ourselves right below that threshold in terms of the assets delegation. So if you're in New York City, if you're in a big city, the way that the world's moving is that financial advisors are not interested in you if you have an account size of less than $250,000. They just can't make any money that way. And so our starting point, our early adopters are in that 50K to 250K tier right below, and we look to expand upward in terms of assets as we continue to build new strategies into the platform. For example, we're working on downside protection right now. How many out there, quick raise of hands, if I could tell you, you could protect your portfolio against a 10% downfall in the market and you'd be completely capped out, no more loss than 10%. Would you want that?
Right.
I think so. It's an options overlay strategy. We buy puts, we sell calls, and we do it automatically to create an S-shaped return curve. It's called a long collar in the hedge fund world, but it protects your portfolio to the downside. These sort of strategies that we're building in are what we believe to be really takeaway share from the human financial advisors.
Yep. Great answer. One last question. Any IP protection?
We keep mistrade secrets on our servers and don't
Okay.
expose them.
Okay, thank you.
Be careful of this.
Yeah.
Yeah, great pitch. Just to kind of pile on Dan's idea, maybe in terms of target market, and I know a lot about this space. I'm using probably 3 of your competitors just part of my own research. And long and short of it is, I'd love to hear more specifics on that target. Like you kind of just touched on it in your last answer, and I felt like you moved so fast, which was good, by the way. Like 5 minutes is no joke. But like, why are you guys going to be different in going to find this kind of sub $50,000 self-directed millennial, customer? Because the hardest part here is literally going to find the first 20, 30, 50,000 users who are going to give you 5, 10, whatever it is, $1,000 bucks. So that's where I'm going to come back hard. If you got me at the trade show and I want to follow up with you for another pitch to hear, where we go in the next round, I definitely want to know that you know how to find those early adopters, because this is going to be really a B2C marketing challenge, which up against the people you put on that slide, I mean, big time game. Like that's hard. That's hardcore.
Yeah, absolutely. So
I'm telling you what you already know, but I definitely would love to see you at least have some address that a little bit versus just kind of like, here's the competitors, Venn diagram, like boom.
that's fair. That's fair feedback. And the one additional point I'll give is that where Wealthfront and Betterment are really targeting right now. I mean, if you look, this is all public filings if you know where to look, but you can figure out the average account size at Betterment. You can figure out the average account size at Wealthfront. Betterment's around $25,000. Wealthfront's around $40,000.
Yeah.
And what they're really tackling are people who are at that smaller demographic. We're trying to be a bit above that.
Yeah.
In terms of assets. And
cool.
So that 50 to 250K tier is where we think there's a lot of excess exposure. And if we were to put a persona on these type of people, like who are we actually talking about here? We're talking about bankers, lawyers, accountants, professionals, MBAs, people who are intelligent enough, active enough to want to manage their own money, but they realize I'm a really busy person.
Yeah.
I've got minimal time to actually do this, and if I can get the right tools to move my investment management forward faster using the lowest cost ETFs in the strategy allocations that I want, downside protection and so forth, those are real value adds that can go on top.
I would take the persona concept, if you haven't already, and put it into the 20-page pitch, because I think that's a great way to just kind of solve that problem.
Sure.
That concern that I had that you don't know how to market, direct B2C, because that'll be it. I think my bet is you either know how to market or you don't. The only other thing was that the UI is really clean. I really kind of liked how the product feels. This concept called a grit score popped up. Like there was just some substance in there. I thought you might have if you'd slowed down and been like, hey, for example, we've created this concept called the grit score. I don't know what it means, by the way, but again, just give me some more substance as to why Commandiv is different versus just plowing through it. It just looks great. So I kind of wanted you to stop a little bit and be like, here you go. I mean, the trade thing was interesting to me. But I think that's the commodity part of this. It's like buying a stock is easy. You explaining how to protect a 10% drawdown to a 28-year-old who has a $20,000 bonus from Bank of America this cycle is, in that persona, that's a really interesting kind of way to grab me. But,
It's good, thank you.
yeah.
So can I do one quick follow-on? So one of the, so the automated advice portion of what you were doing, you showed an example of what it looked like, but you didn't really explain how you did that, right? So can you do 30 seconds on how you actually get to the automated advice portion of what you do?
Sure. Let me do it at a high level to the point where I'm not giving away trade secrets. And the answer to that would be to begin, we have an allocation engine, which is going to recommend to you the broad strokes allocation suggestion that we would make. This is very similar to the technology that exists at Betterment, Wealthfront, and so forth. The next thing we allow is you to crack that open and create your own custom target portfolio. So that's one thing you didn't see in this demo, where you can actually go in and move slider bars to say, well, I want more debt exposure, I want more equity exposure, but I want that equity exposure to be in, U.S. materials or U.S. energy or so forth. Now, after we have your general allocation strategy, we're then going through our internal strategy map of a universe of U.S. traded ETFs. About 765 to 770 are categorized internal in our system. And we go through and profile all of your investments and understand what your current allocation strategy is, what the future, what you want your allocation strategy to be, and then run it through our optimizer to figure out using the lowest cost, highest liquidity product for each one of those strategies, pushing you back towards your target portfolio.
Thank you.
Yeah. Thank you.